Good morning, everyone. I'm Vince Lansing. This is the GoldFix Market Rundown. It's 7:59. Today, we're going to discuss Newmont delists itself or voluntarily delists itself from the Toronto Stock Exchange in part of their cost-cutting drive. We'll also be talking about the gold market, which is, I think, at a short-term critical point, and discuss a trade that I just uh, took half profits on. There's the home page. We'll be talking about the lower left-hand side. And let's do the markets first. 10-year yields at 405, up 1. The dollar is 97.98, up 19. The S&P 500 is 65.47, up 16 and change. The VIX hovering down a little bit. Gold down 24 on the lows of the evening at 36.16 and change. Silver 41.09, only down 9 cents, comparatively speaking. Copper 453, unchanged bid. WTI is 63.21, 23, down almost a buck, down 80 cents. Natural gas, unchanged bid. Bitcoin, unchanged bid. Ethereum up about 2%. Palladium up 7. Platinum up 1. Gold, silver softer and a sell-off. We'll see. Grains mixed, wheat down. Okay, let's get right to it. Newmont, the world's largest gold miner, is pulling its shares from the Toronto Stock Exchange, citing low trading volumes and a drive to cut costs. The delisting takes effect September 24th. The move comes as Newmont targets $300 per ounce in savings, all in savings costs, mining costs. A goal that could mean layoffs and shuttering operations that are not low-cost production. Since buying Newcrest for $17 billion last year, Newmont has sold several Canadian mines, including Eleanor, sorry, in Quebec, Musselwhite in Ontario, and its stake in Porcupine. That leaves just Bruce Jack and Red Chris in British Columbia. Analysts say Newmont's, quote, Canadian footprint is shrinking as it consolidates around core operations abroad. The fact that all divestments so far have been in Canada suggests proper focus on cost reduction is being executed. Canada is a high cost jurisdiction for them. For example, labor, mining wages and unionization levels are higher relative to other regions. Energy, power costs to remote areas like Quebec, Ontario are substantial. And regulation, environmental and permitting standards in Canada, I believe, I'm not that familiar, are strict and expensive to comply with compared with some jurisdictions in Latin America or Africa. Essentially, mining in a developed country is more expensive than mining in an undeveloped or developing country. And Newmont is cutting costs to do that. I think the company should be rewarded for its actions if it hasn't been already. The question is, will this spur friendlier government to Canada's mining industry? A clarion call to simplify operations. But we have the full analysis in the post. Newmont pulls back in Canada. We also touch on the fact that even though it has nothing to do with Canadian American relations, it is symptomatic that as the world deglobalizes, right, as people pull in the reins and onshore supply chains, cost becomes a factor. So, by no means is this uh, anything about Canada and the U.S., but it's all part and parcel of what's going on. Uh, look for other miners to do the same. Although I wouldn't know exactly how they would do it, but it's probably not very good for the small Canadian miners seeking to be bought. I'm not sure. The delisting, though, it doesn't save them much money. So the delisting, I think, is symbolic more than anything else. What I mean is, if you have a listing of a stock on another exchange and doesn't trade much volume, you don't delist because it doesn't trade much volume. You seek to have your footprint. It's an advertising, it's a marketing piece. It sounds to me like it's symbolic of something. I don't know what, though. Moving on. Related post, the silver tariff situation, our layout of what we thought should happen. We hope that it would happen, and we're just not that comfortable believing the government will do the right thing, at least the first time around. Goldman private diversification as the next giant leap for gold and commodities. That's their missive saying that, telling their clients um, that the next big push in gold will be more and more from Western American individuals buying gold and miners. Founders AM, producers, profit takers looking again. We'll share something with you on that. 1 billion bank sees producers in the market above. I mentioned that yesterday in the chat. And some profit taking potentially leading into the number. It's not to say the market won't be bought on dips. It probably will be leading into the Fed decision. But just know that some people are taking profits now. And there's producers selling above, then assume that there'll be producers selling above after the Fed decision, whatever that decision may be. Howard Lutnick starts a Bitcoin gold fund. That's a promises Bitcoin upside with gold protection, assuming that the two metals move in opposite directions. Then we break it down into a Bitcoin gold fund risk reward and give you our opinion on how it works as a product. Be careful. We're going to discuss, and we're going to discuss for the chat people, the current market this morning. Today is CPI. There's the window. Today is CPI at 8:30 a.m. CPI comes in. August is 0.3 month over month. CPI is expected to be 2.9 year over year, and core CPI 0.3. Core CPI year over year 3.1. PPI came in very soft yesterday, extremely soft yesterday. You should not look at that as a predictor of CPI. PPI is in the pipeline. CPI is what's happening right now. Nevertheless, there really hasn't been any uptick in CPI. Tariffs do not seem to be as inflationary as they would have you believe, especially when corporate profits are at all-time highs. They can cut some of their profits to help people out just a little bit. All right, so charts and final market check. So anyway, I woke up this morning to an alarm. You may or may not remember yesterday I mentioned, hold on, let me fit this all in here. Mentioned that we were above $100, above 36.20. And I said, theoretically, I should take half my profits now. What I did do is I took half my profits on a stop order last night at 36.20. So I got stopped out on half around the 36.18 level. And so I went to this chart at 7 a.m. And well, the 8s and 9s are what I care about in this chart. Okay. So we want to focus on the yellow and green 8s and 9s. The 8s and 9s on the yellow and green side say the market is oversold. It's a potential bottom, potential bottom. What you people like to swear by things like this. It's not good to swear by it. What it is good to see is how the market reacts to the signpost. So I'll give you an example. Here's an 8 and 9, signaling a potential bottom. The market rallies to here, to the 8 and 9 sell. We don't care about that one. Well, you could care about it, but I don't. All right. Then we get an 8 and 9 bottom to an 8 and 9 top here. An 8 and 9 bottom with no 8 and 9 top. An 8 and 9 bottom. Okay. So what do you notice? The bounce off the 8 and 9 bottom is big. It's smaller. It's even smaller. And my question mark there was, what does that mean? So below 36.20, which is where I got stopped out, I think this range is very possible. That puts us between 3,600 and 3,585, let's call it. So do not be surprised if CPI comes out today and the market gravitates towards 3,600. Okay. Will there be dip buyers? Of course there'll be dip buyers. We're going into a FOMC. But I want to emphasize that buy the rumor, sell the news is in play. So for the next, so once the Fed makes their announcement, anywhere from 1 day to 2 weeks, the market could be in a downtrend. It could be in a downtrend from a higher level, but it will be in a downtrend, at least short term. So that's it. I'll make a decision on the other half later on. So there's where we are now. Here, let's take a look at that. Right? So we got the 8 and the 9. It cracked the 9. That's not good. Okay. That's not supposed to happen. It's supposed to stop dead on the 8 and 9. But it didn't get below the 8. It got below the 9. So you should be thinking this. You should be thinking, you should now say trend, hourly trend. We're talking about 1 day here. Okay. Hourly trend lower. What happens if we break the trend? So for the rest of the day, if I wanted to be bullish, I'd be looking for something above this trend line on the hourly, right? And I'd either buy it on a breakthrough of the trend line or buy it on a retest of the trend line. But I would wait until after CPI is out. In fact, I'd probably wait until after 9:30, let the market digest what's going on at CPI. Otherwise, otherwise, it's crazy, but this could be another bull flag. It could be another bull flag, but that wick is kind of bearish engulfing. I'm pretty sure it's bearish engulfing. You have a long wick above here. Normally, I'd say we're going to fall off the shelf, but this isn't that gold. There's an event coming up, and people are playing it. So we shall see. Silver's encouraging, but that's because, silver, everyone's been selling silver for the last week against buying gold. Everyone. So I would say on a week by week basis, silver is going to be 70% gold driven, 30% stock driven. We'll see. The numbers coming out. 8:11 now. Vince. Have a great day.